Let's talk to Clem Chambers from Investors Hub. Very good morning to you, Clem.
Good morning, Nick.
In terms of the S&P 500, 2950 key support back above 3,000. I read with interest commodity prices are falling, oil's a tad weaker. Does this show that the sort of global demand is slowing? In terms of US interest rates, we're looking for a rate cut. Okay, well, how do you see the state of the US economy right here, right now?
Well, you've got to realise that the big driver of all this is the Fed and their quantitative tightening. And that's coming to an end very shortly. But what they've been doing is basically taking money out of the mortgage market. And that's been undermining the money that comes from housing pretty much all around the world, actually. And a lot of people have been using that as a cash machine. And so people that once upon a time would use their house as a cash machine, going on holiday, et cetera, buying stuff, that's kind of dwindled quite dramatically at the top end. And that means that there's a lot of pressure on the economy. And yes, it looks like we're going to get an interest rate cut in America, et cetera. But that drying up of money is what's causing the global problems in economies all around the world, because people in the West are not using their properties as cash machines anymore, because there's just not the demand from the markets for their mortgages as much as there was in the past. So that is a big downward force on the global economy. Now, that downward force actually ends in a few weeks' time, and probably in a few weeks after that, it will start to normalize out. But there's no more new money coming in from the Fed. There might be from Europe, etc. But so the free money, the printing money environment of QE is not necessarily going to be coming back soon. So we should kind of plateau. And I think if you look at the S&P 500, you'll see that it is kind of plateauing. It has plateaued. I thought it would be going sideways. It actually has over the last 2 years, if you want to look at the trend, going up a little bit. And that's what we're in, a managed market by the central banks adjusting money supply to make sure that the economy is supported, but doesn't run too hot, doesn't run too cold. So we're in the sort of, sideways, a little bit bearish, a little bit bullish market, a market without a slump, a market without a boom in it. And so you can expect that to carry on. There will be dips, and the strategy is to buy those dips in this environment and sell the rallies. Well, we are at the top of this particular channel right now, so the best that can be expected is that it stays up around these levels but doesn't go very far in either directions. I think that's probably not a bad place to look at it, but I would expect there to be more volatility over time, and you buy those dips and you maybe take a little bit of risk off at these high levels.
Well, just to wrap up, okay, we talked about the point and figure chart suggesting 39,000 on the Dow Jones, an upside of 44% from here last time I looked, okay? Any chance of that happening anytime soon in the next 30 seconds?
Well, if the Fed was to crumble under the boot of the mighty Trump and go inflationary, of course, it'd be very easy. If they ever started QE again, it will go straight there. Well, maybe not straight, but, that will be the tendency for a big bull rally. And I can see that. I can look at the charts and go, yeah, that could happen. But it's all down to the Fed. Now, if the Fed end QT and don't talk about QE and interest rates come down a little bit, doesn't seem very likely that that would happen, because you need new money to go in to boost asset values. So, you just got to watch for the new money coming into the market. Now, if the Fed crumbles and goes, yeah, let's have a little bit more QE, let's get the economy going, let's do what Mr. Trump says, let's, make this market fly. Well, yeah, easy. But I don't think they will. I mean, it would be unprecedented that the central bank goes against their best interests and follows the politicians. After all, that is the high road to hell as far as economics is concerned.
On that note, Clem, we run out of time. That's Clem Chambers from Investors Hub. Thank you very much indeed.
Thanks, Nick.